you buy a non-performing loan, and let me just kind of give you the idea here. So, Kim, you live in a house that you owe $150,000 on. It's currently worth $100,000, so you're underwater, and there's still about 3.5 million, almost 4 million underwater homes out there. So you owe 150. It's worth 100. Well, I buy that non-performing loan from a hedge fund for $25,000. And these loans are selling 25 to 50% of as-is value. So if I buy your loan for $25,000, I can certainly, if you want to stay in that house, I can modify your loan. I can drop your unpaid balance from 150 to 100 without ever missing a beat, right?
Right.
I could even drop your unpaid balance to 80 and give you some equity in your home without missing a beat because of what I've paid for it. If I've paid $25,000 or $30,000 for it, I've got a lot of room in that. And over the years now, over the past 4 or 5 years, I've been able to do just that in my note business. I've been able to do that, just that, help somebody stay in their home, get them going again. And it wasn't because these were bad people. It's just they got involved in something and nobody was out there really that was willing to talk to them and help them. And some of these loans have, borrowers hadn't made a loan payment on in 4 or 5 years. And that, like I say, doesn't make them a bad person. It's just nobody was reaching out there to help them, or they just couldn't get it done. So anyway, I just know that I've done about 100, maybe 120 of these non-performing loans where I've modified them for the borrower and kept the borrower there. And I'll tell you, that is a good feeling to be able to keep somebody in their house with dignity after they've been through something that's pretty bad. So I buy your non-performing loan. There's only 3 things that can happen, Kim. Number 1 is just like I talked about. I can modify the loan for you at a real modification, not something that's kind of what we call at NoteSchool, extend and pretend. So I can really modify your loan. The second thing, if I can't modify your loan, then the second thing that I would ask you to do would be to sign the deed over in lieu of foreclosure. Now, if you remember when we first started talking about what is a note, well, the borrower has the deed to the property. The lender has the promissory note. So what that means, or what a deed in lieu means, simply, Kim, if I were to give you a couple $1,000 cash for keys, would you just sign the deed back over to me so that I don't have to foreclose on you? So we know that when you buy a non-performing loan, our statistics say that 40% of the time you'll be able to modify the loan, which means you have a reperforming loan. So, Kim, when you have a reperforming loan, you're the bank, right? I mean, you become the bank, and you can either keep those payments, you can sell those payments for cash, or you can sell a piece of the payments, called a partial, selling a piece of the loan. Now, we certainly aren't going to get into that on the call today, but we're going to get into it more on Tuesday and Thursday in May. So either you're going to, I'll modify the loan, I will you'll sign over the deed in lieu of foreclosure, and if number 1 or number 2 doesn't work there, then the third process is I would have to foreclose. So what we know inside of NoteSchool is about 40% of the time you're going to get a deed or a modification, about 40% of the time you'll get the deed in lieu, and about 20% of the time you would have to foreclose. And foreclosure isn't a big bad thing. It's a pretty fast process in all but 4 or 5 states, and those states are New York, New Jersey, Massachusetts, California, and where I live. I live in Florida, guys. I live in a little town called Okeechobee, Florida. So anyway, I'm going to show you how to buy non-performing loans and why that can really give you another way to acquire properties by acquiring the note. So instead of, and kind of the analogy is, so got a house that's worth $100,000. An REO investor or somebody trying to buy the property from a bank that's foreclosed on it, they're going to pay somewhere between $78,000 and 88% of as-is value. So they're going to pay somewhere between, let's just call it 75 and 85%, or $75,000 to $85,000 on the as-is value for that house. As a note investor, we're going to buy the non-performing loan for somewhere between 25 and 50% of the value, as-is value of the property. So we're going to buy it at $25,000 to $50,000. Most of the time, it's going to be in that lower range of somewhere between 25 and 30% of value, not up to 50. So it's just an amazing way to acquire property. So what I just told you was about 40% of the time, you're going to get a reperforming loan for cash flow, which means about 60% of the time, you're going to get the property if that's what you want. And I'll show you how to do all of that and the due diligence and what goes along with that. So I think the cheapest loan I've ever seen purchased, and it may have been by Michelle and Brian, Kim. I think they purchased a loan, non-performing loan one time for about less than $1,000, right?
I got them beat. I got one for free.
Oh, you did?
Yes, I did not like the pool I was buying. I said it wasn't good enough, so they threw in an extra note that I was not able to foreclose on, but 3 or 4 years later, because the paperwork wasn't quite right, 3 or 4 years later, the loan behind me, there was a third.
Oh, my God.
They foreclosed and paid me off, plus all of my interest and fees and yada, yada, yada. I made $14,000 on a note I got for free.
So, how would we even calculate the return on that, Kim?
I didn't worry about it. $14,000 on free. I thought
it was enough, right? Now I'll bet.
Good enough.
I'll bet one of our NoteSchool guys that you know well and I know very well, Russ Brooks. He's an engineer, and I'm sure Russ Brooks could probably tell us what your rate of return was on that. But
I'm sure he would know.
Yeah, but what Eddie or I would say was your return was enough.
Yes.
So guys, Kim, let me just run forward here, and I'm going to go through and just hit some highlights again. The reperforming loans from banks. So the non-performing loans in the lower price band properties, which are somewhere $125,000 in current as-is value or less, are selling for 25 to 50% of as-is value. Reperforming loans are selling for somewhere between 60 and 80% of as-is value for the property. So sometimes the hedge funds and the banks can modify the loans themselves. So we're going to show you how to acquire, where to find these reperforming loans, as well as how to price them